So negative correlation, right? Interest rate go up, the market didn't crash, as we can see post.com and post-SARS, even though the interest rates hit 5%. The first myth would be with regards to interest rate, because that is one of the key things that is happening, right? The key questions in everybody's minds at this point in time, right? The Fed increasing the rates so aggressively, local banks removing fixed rates from the market. So how would that play out for the market as a whole, right? Because to us, of course, it's going to impact your mortgage, right? The one you can answer yourself, like, do your own projections. But how is that going to impact property prices? So that's the question that we want to answer today. Number two, right? Small developments are unprofitable. Okay. Number three, which is also another question that a lot of people are asking, is you lose money if you buy at a peak, right? Because a lot of people are afraid that right now we are already at a peak, right? 2000 PSF OCR, recession coming, interest rates going up, right? The only way is down, based on conventional wisdom, based on what happened in the past. Now, is that a truth? Is that the truth, right? Is that a myth, or are there facts to it? We're going to talk about that. Okay. And lastly, the CCR is too expensive and nobody can afford to buy, which is why you hear stories of OCR developments losing money. Now, is this true? We're also going to address that in today's session. So a lot of things to cover. Stay tuned, but exciting data, exciting research to share as usual. First things first, interest rates are going up. What does that hold for the market in general, right? Are prices going to drop? Now let's look at this. This is a chart, right? This chart is a chart that tracks the correlation between the property price index and the 3-month SIBOR, all the way back to 2002. Okay, now let's look at this together. So after the dot-com burst and SARS, right, interest rates had to go down, right, to sort of prop up the market. Okay, but then as the market recovered, interest rates went up very, very quickly. For most of us, right, we already forgot that SIBOR can and did used to hit 5%. You see over here, in excess of 5% in the early 2000s. Okay. Now, did that crash the market? The answer is no. As you can see, it did not crash the market. Okay. So negative correlation, right? Interest rate go up, the market didn't crash, as we can see post.com and post-SARS, even though the interest rates hit 5%. Later on, I'm going to share with you a reason why it didn't hit prices that much. Okay. Next up, the global financial crisis. With that, the US government had to push prices down. Now, this pushing of prices down did push prices up, right? But it wasn't the only reason, okay? Because there were also a lot of liquidity that flowed into the market because of this. They were not just reducing interest rates, they were printing money as well. So all of this led to that huge spike, huge increase in prices, 09, 10, 11, 12, right? That led to all those cooling measures being put into place. And then as the economy started to recover, interest rates had to come up again, sort of hitting its, right, gently coming up from 16, 17 all the way up to 2019. So now this is where you may see sort of a slight correlation between interest rates coming up and prices sort of tapering off after the 2013 cooling measures. But actually, if you look at this, the answer is there. Is it really because of the interest rate or more because of the cooling measures? The answer is because it's more of the cooling measures as opposed to interest rates going up. Okay. Next up, right, interest rates hit its peak before the whole COVID fiasco, right, hitting SIBOR 2%. Over in 2019, okay? But with that increase in interest rates, again, did that lead to price dropping? The answer is no. Prices continue to go up. So actually, in the whole scheme of things, if you zoom out, right? There is very, very correlation with property prices and interest rates in Singapore. Now, let's answer the question why. So why is it so that the correlation is so low? Because we learn in economics, right, that if interest rates go up, or don't even need to learn economics, common sense, right, interest rate go up, we all hear stories of, wow, if interest rates go up, people cannot afford to pay their mortgage, and then they'll put their properties up for sale at fire sale prices, and that's why you see drops in prices like the global financial crisis. Okay, but now the key thing to answer here is this, will this happen again today, right? Okay, so we all know, for those of you who follow us, the market of yesteryear, the market pre-2013 is a market that's significantly different from, in terms of fundamentals, from where it is today. Pre-2013, a lot of speculation, okay? You can buy 2, 3, 4, 5, 6, 7, 8 properties without ABSD, taking 90% leverage on all of them. But today, maximum one family, 2 properties, unless you have a lot of cash to pay all that 17% ABSD, so on and so forth, okay? So now that's the very first answer that I have for you guys. Will we see this high interest rates, right? This high interest rates, right? And then subsequently an impact, right? This is the question people have. Subsequently, you have a impact of a recession, global financial crisis, then you see prices dropping. People are afraid of that happening in the market. So do I think that will happen? The answer is no. So other than the whole pre-2013, post-2013 thing, I'm going to share with you a little more data to back my sort of conclusion. 2 things. The conclusion that I have, why I derive on the conclusion that I have, okay? So very little correlation with property prices and interest rates, right? So what has a higher correlation? Okay, these 2 charts, right, are the charts of HDB BTO supply. Okay, HDB BTO supply. In 2013, 2014, 2015, the numbers were very, very low. This one is from 2015 onwards. You notice how the number were very, very low. Low until in 2013, we only have 1,700 HDBs hitting their MOP. So now, I'm going to show you the correlation. This low number of MOP supply, right, corresponds to a period where prices remain quite stagnant, 2013 all the way until 2017. Okay, and then after that you see prices starting to pick up, 2017 onwards, and this very nicely corresponds to the pickup in MOP supply. Now, why so? Okay, it's because you see over here, this is by DBS. DBS assumes about a 30% upgrader demand every time they hit MOP. I prefer to use a slightly more conservative number because we are on the ground. Usually, if you track the data of MOP flats and then how many transactions come up there, right, it's more along the lines of 10 to 15%. So if you use that percentage, and then you see, because I liken MOP, or I liken government's building of MOP to them injecting liquidity into the property market, right? Because you take a stone and throw into a HDB flat, the stone hit somebody, smelly, the guy make $200,000 to $300,000, right? And so now you have a whole block of people making $200,000 to $300,000. $200,000 to $300,000, and these people, about 10 to 15% of them will look to upgrade. So a difference between 1,700 MOP, 10% is 170 households. 170 households with maybe $200,000 to $300,000 profit moving into the private market versus, right, the numbers today that is averaging out to 19,000 or 17,500. That is 10 times the number, 10 times the amount of liquidity flowing into the private market, hence leading to an increase in price like that. I see a closer correlation to price increments because of HDB upgrader demand as opposed to low interest rates, because we have seen low interest rates not necessarily driving prices up. It is probably one of the reasons, but as we have seen, sometimes interest rate go up, price come down, sometimes interest rate remain low, but prices also don't really go up. As you can see over here, there's a period of time where interest rates were still very low, but notice the price coming down, right? So closer correlation to price increments to HDB upgrader demand as opposed to low interest rates lah. Of course, not to say low interest rates has no impact, yes, but I see a closer correlation over here. Now, next chart, right? What has a closer correlation to price decrease? So that one, HDB is close correlation to what pushes prices up, but what causes prices to come down more so than interest rates, increasing interest rates, right, are an answer that we all know lah, property cooling measures, okay? So this chart, as you can see, every time cooling measure will lead to prices either stagnating or prices dropping, okay? And I think this is something that all of us know lah, so I don't think I need to go into this that much, okay? Now, maybe the only thing I can say over here is that I get a lot of questions as to, hey Alvin, do you think new cooling measures come, prices will drop? So I've said this once and I'm going to repeat again. A cooling measure serves to halt, pause, delay demand, right? It doesn't, the government's intention is not to destroy demand or remove demand from the market. That's, I'll say, why I say that, right, is because you see this price drop after 2013, right? It's because the government removed speculative demand from the market. Okay, they removed speculative demand from the market, which is why the market then underwent a couple of years of stagnating growth, as because, number one, a lot of people were stuck onto the properties that they kind of bought at a high, which is one of the things that we're going to talk about later on, right? So now you bought a property in a period where there is upgrader demand, owner-occupier demand, okay, upgrader demand but not a lot, right? A lot of speculative demand. So now that demand has been stripped out of the market. You bought the property with the intention that I'm going to sell it to another speculator further down the road. Now, that buyer is gone, so you're not going to be able to sell your property at that sort of prices anymore. All right, and that's why it sort of explains the stagnant, anemic growth after the 2013 cooling measures lah. Okay. Hello, sorry to interrupt. We'd like to take the opportunity to thank you for watching the video and also to share why we do what we do. Is to empower consumers with hard facts and figures, quality research and real-life examples to allow them to make the most informed property decisions. So if you found our videos useful, the only thing we ask for is for you to smash that like and subscribe button so that the YouTube algorithm can push out our videos to more consumers. Thank you, and back to the video. So now the new cooling measures, unless they strip out a chunk of demand from the market, of which the market now probably only has two left, investor and owner-occupier. Do I think the government want to remove investor demand from the market totally? I don't think so, because we are Asians, right? Our hobbies are saving money and buying property, right? So if you were to remove investor demand from the market totally, Singaporeans will still want to buy property. Then where they go? They go overseas, right? Because let's say the industrial property, commercial property, of which the numbers is not a lot, the transaction numbers is not a lot, right? Of course, it will lead to the increase in those prices lah. But a lot of money will then flow overseas, right? Number one. Number two, the money then don't also flow into Singapore anymore, right? So then that's going to have a huge impact on the GDP, government revenue and everything. So unless prices really shoot up 10-20% quarter on quarter, I don't expect the government to remove investment demand from the Singapore property market. Okay, so will there be a situation whereby cooling measures come and property prices drop a lot? I don't think so, based on the reasons I have stated. Okay? Next, I don't want to go into too technical stuff because I've already gotten feedback that our live sessions are getting more and more technical and people cannot see through the whole session. So let me just keep things simple. Right? So if you want more technical stuff, you can reach out to me and then we can have a nerdy talk about the property market. So next up, I'm going to give you 3 reasons why I feel an increase in interest rates will not lead to decrease in property prices. Okay, number 1, you got to analyze the average loan to value of the Singapore property market or the Singapore household on average, right? That number is today standing at 45.7%. What does that mean? That means if the Singapore household were 1 person, okay, or if you average out all the property loans of the Singapore household, most of them have already paid up more than half of their properties already. So what does that mean? That means an increase in interest rates will not have as big of an impact as what we think, right? Because if this number is today standing at 60, 70 or 80, 90%, right? Of course, then that will impact us the most because there's a difference in the impact to your monthly mortgage. If your house is 75% leverage, 90% leverage, and 50% leverage, huge impact. Okay, so now 45%, already 45% paid, and bearing in mind, most likely a lot of the HDBs are fully paid already. Our parents' generation, the baby boomers, are most likely already fully paid. So this actually is for the people maybe 50 and under, right? Average only 45.7%. So this table taken from the MAS Financial Stability Review, one of our favorite things to quote, right? Because MAS is there to prevent such a thing from happening, right? Prevent the market from over leveraging, prevent the market from facing a huge shock when things change, okay? And how they have done an excellent job to prevent that from happening. If you were to read the review in detail, you will know how much they think ahead already and how safe you can be lah. So TDSR today is only at 50, allowing you to use only 55% of your combined household income to service debt at a 3.5% interest rate. Okay. While we are slowly creeping up to it, how does the numbers suggest? Okay. Next up, I'm utilizing another parameter to share with you guys, right? The mortgage loan to property assets ratio. Okay, and I'm taking data from 07 to compare to where we are today. Okay, now we look at this. I don't want to use red anymore, but how do I choose the color? Let's choose blue because the words are red. Are they blue? Yes, they are blue. Okay, so now this is the Singapore household balance sheet taken from data.gov. I have calculated today the mortgage loans to property asset ratio is 21%, right? So overall property worth and so the amount of mortgage loans over the property asset value. So I take this divide by this, okay, and I get 21%. Over in 2007, that percentage was 25%, right, with an interest rate environment of 1%. Sorry, 3%. Right, today is at 21%, so that number is significantly lower. We are closer to 20%. Right, 1/5. Last time is 1/4. Right, and the SIBOR today is only hovering at 1%. So another 2% more to go. But even with that, our mortgage loan versus property asset value is not even anywhere close to where it used to be in 2007. Okay. Next up, you can also look here, right? The cash holdings in the property in the Singapore household, the financial assets the number is very, very high. But the bigger number to see over here, anyway, I think here is maybe a bit hard to see. Some of you see so many numbers a bit blur, right? I show you in chart form. Household liquidity, and I bring your attention to this chart. Like I said just now, right? Asians, Singaporeans, hobby is save money plus buy property. Why I say that? if you look over here, you see cash and deposits held by the Singapore household in 2010 is about 200 over billion dollars. Today is close to 500 billion. So in the space of 11 years, the Singapore household has saved $300 billion in cash. Okay, now that's a lot of money. How do you make sense of that money? How do you make sense of that money? I go to the previous page. Singapore household sitting on $500 billion in cash. The total Singapore mortgage loan is 260 billion. 260 billion. So what does that tell you? It tells you that at any one point in time, the Singapore household can fully pay off the mortgage if they want to. Okay? Of course, it doesn't apply to everybody. I know we all wish we have that ability, but now this is just the average of the overall Singapore household. Okay? So Singapore net cash position, very, very good, right? Growing at a much faster rate as compared to household debt. You see over here, right? Growing at a much faster rate than household debt that's growing at this rate. So this is the debt over cash ratio, very, very healthy. Now I also put out another part circled over there, right? The MAS have also done a stress test. I think they have probably an entire department dedicated to doing stress tests on the Singapore household. How they stress test, right? Look over here. Even if incomes fall by 10% from the lows seen during the COVID-19 pandemic and interest rates increases by 250 basis points, which means 2.5%, the bulk of the household liabilities being housing loans, the median household would still be able to service the debt. Right, so now we have a couple of layers to things. So after reading this, okay, but if you really were to look at it, of course, this is written late last year, in December last year, where SIBOR is, let me get that figure out. SIBOR, when this report was written, was at 0.5% last year. Today is at about 1.5%, if I'm not wrong. Let me just get that figure for all of you, just to make sure we are correct. Yeah, 3 months SORA, start of the year 0.19, now is at 1.9 so it's if you calculate that, is the difference is 1.9 minus 0.19, 1.7. Okay, so we have about 0.8 more to go before we hit that real benchmark that MAS has set. But that is also factoring in a 10% decrease in incomes. So very, very drastic scenario being put in by MAS already. So with all this being done, what's the conclusion that I have? Okay, right, there's a very low correlation between interest rates and property prices, right? There's a higher correlation between in terms of how prices move up with HDB MOP supply. Right, so if I'm telling you, if HDB MOP supply drops and interest rates are very low, the property prices also will not go up. Okay, and I'm also going to go to the extent to say, even if interest rates are very low and government removes the possibility to decouple, property prices also will not go up. Right, which is why I go up to say interest rates have very, very little impact on the property market, right? So instead of generalizing hearsay, just listen to what people say, hey, don't buy lah, right? Because interest rates going up, property prices sure come down. People confirm cannot pay their mortgages, and they will then be forced to sell their properties for cheap, right? All those things not going to happen. The data shows you otherwise. Of course, maybe one or two of them may face this kind of scenario, a couple of them, right? Non-performing property loans in Singapore, under 1%, 0 point something percent, right? So if you're hoping that interest rate go up and there's going to be blood on the streets, you'll be disappointed. So don't do that. What you should do is to focus on what affects you, right? If you're concerned with the increase in interest rates, do your own plans. If you're looking to buy, sell something, especially buy something, do factor for a higher interest rate. All right, and of course, understand the fundamentals. So you are then, all right, understand the data, understand the updated data, the updated fundamentals, so that you are not prone to then just falling into the trap of just listening to what other people say lah. Okay.